The S&P 500 continues to implode, with October being one of the worst months on record. Several sectors have started to roll. War in the Middle East is adding up and increasing tension. All of this is leading to pressure, and we are seeing pressure on varying sectors. Sectors are moving. Why? What is smart money doing about what is happening? What are the current earnings doing to the current situation? And how are they helping or hurting us? Are we losing more sectors or gaining more sectors? One of the most important things for us to focus on is which sectors are currently moving as we go into the end of the year. Which sectors are affected most by what's happening in the Middle East? Are we currently gaining or losing more sectors? And what I mean by that is, are more sectors getting above the S&P, or are we losing more sectors as they drop below the S&P and the NASDAQ? As the Middle East conflict heats up, we have to look at which way money is transferring. What happened since July 27th when Japan came out and changed their monetary policy? We're seeing some significant changes here, and we're going to address that today. We're also going to address a way that you can follow this yourself and how it can add significant value to your portfolio. Let's get to it. Hey everybody, welcome back. Well, we tried to get over a key level and we were rejected, as we can all see. We're going to talk about what's driving that and what we need to do about it. But this is really where we ended up. And 41.39.25, no one's going to feel too great about that. You can see the retest of the 4,300, how that went. And now we just have something that anyone that goes back in history is going to just talk about how obvious this was. And this is the beauty of technical analysis. It's a lot easier when you go back in time and take a look at it. And that's the one thing that everybody tends to notice. So the question is, what do we do now? Well, we're going to go through a bunch of indicators. We have to deal with what exactly is going on and what is the main driver of the market right now. Now, we're going to talk about this a little bit and what's driving it, but as this conflict starts getting greater and greater, this is starting to become a bigger issue for us. It was one thing when we had some uncertainty and we didn't know, but if this becomes prolonged and going on for time, we're going to see a shift, a major shift in what's going to go up and then what's going to go down in regards to the market, commodities, etc. And we will get into that in detail in this video. But if we take a look at where we're at right now, we can see very clearly that we broke. We can see very clearly the 200 SMA has been absolutely shattered. This is your follow-through bar, and then on top of that, you can see how we rolled. Now, it's always good at the end of the week to go through and look at our weekly chart and see if there's anything there that we really didn't pick up. And there is some stuff here that we should probably talk about. For example, right along our level here, we can see that this has been a key contention point. We have stopped here several times, and you're right at that 30, that's 32. So 41.32 really seems to be that area. And you can see rejection after rejection in here. And it became support for a period of time, and then it flipped to rejection over and over again. Now the question becomes, do we hold in this area, maybe do some kind of undercut and then flip and then go back up? No one has the answer to that yet. With the activity and the way that we moved today, recording this on Friday, this portion of it, and of this video. And the reason that I'm pointing that out is because the games that were going out there today did not make you think that a rally's near. Now, on the weekends, I like to spend time digging in, and we will, but I think that we have to understand this 41.80 has really been a nemesis. And what I really, really don't like at all are the games. I know games are part of it, but there are certain games that you learn over time that mean things more than others. At least let me put it to you this way, that's how I view it. So when you have a high here, and then you have a high here, and you keep taking these highs out. Then you take out these lows, and then you're taking out highs. Then you're making lower lows, you're taking out highs. What you're doing is you're just shaking the tree, and you're getting everybody out of position. So if you really look at today, the methodology behind today for any trader on Friday was absolutely maddening. Now, everyone that you talk to on social media will tell you how great they did, and that's fantastic. But then there's also something called reality. This is very hard to read, because what you're doing is you're taking key resistance points and you're popping over, giving confirm, giving retests of those confirms, and you're still going. Now, this carried on for a couple days, and then we had, obviously here, we had the failure, trying to rally, wicks over, undercuts, so clearly it's going down. I mean, and this during the daytime in trading is about as deadly as you can get to any trader, because what you're really doing here is you're breaking down. So here's where you're at, right around that breakdown time, 9:30. We rally, the rally fails, we break down right around that 10:40, and this is why I'm getting granular on the week. And because this kind of behavior is new, and you need to be aware of it. And one of the people in the community actually picked it out today, which was kind of interesting. It's kind of cool to see people learning. So what's happening here? We're widening out. Well, when we widen out like this, that we're setting up for something. So when you widen out and you start getting into these areas where all of a sudden you start getting that particular kind of pattern, you're setting up for a big move. This in and of itself, this is not the big move. What you're setting up for is something like this, and then you wind up kind of playing around with it a little bit. Maybe you go higher, but the majority of time, if your trend is down, you're not going higher. You're usually going lower. So all they were doing was luring people in today, and they did an excellent job of that. And I want to get into it later, but I'll give you a really great example today of what I mean by this. So if you take a look at Microsoft, 2 days of Microsoft selling on what we all really feel was a very good quarter. I don't know anyone that really bashed the quarter. If you go look at all the investment banks, they upgraded it. But this will really hammer home what I'm talking about. So here you are, 5-minute chart, tries to rally, can't, breaks down, tries to get back over, complete Matumbo, 1, 2, right? Those 3-bar patterns we talk about all the time, 1, 2, 3, and then it broke, and then that was pretty much it. Okay, pretty textbook stuff, and you can follow the trend if you just drop a very simple anchored VWAP from the day that we gapped up, and it'll literally just mark all your spots very, very clearly, but not everybody knows when to use these. People put them all over the place, and it's kind of silly. But anyway, I think it's a great tool. There's a time and a place for it, like everything else. So you can see that, and you might want to start doing this on stocks that had earnings this week. So you might want to just start overlaying anchored VWAPs on the date that these stocks had earnings this week, and you'll start noticing a pattern. When you start noticing that pattern, you want to see it, and you want to just acknowledge it. But again, not everyone's going to see that. This is what everybody's going to see. And this is what makes it so deadly. You see right here? See the volume? The volume increases right in here, right into the push. You're seeing huge increases in volume right in here. And as we're doing that, stock's going higher. Anyone that looks at a chart is going to say, anybody that looks at a chart and is just reading price is going to look at this and say, this is something I want to get involved with. They're going to look over here and go, we've just made the higher high. And I know these aren't exact, but you get what I'm putting down here, and that's really important. Oh, so we made this higher high, we cleared this after the retest, and we held. Not everyone's going to drop an anchored VWAP here and note that there's a level up here that they're not even aware of. And that in and of itself is an issue. But when you start taking out these higher highs like this, these are games, right? This is the definition of flim flam. Now, for NVIDIA, while we're on the topic, same exact thing, much clearer. Look at this buying that came in at 11:15, and look at where we are at 9:30. Okay, usually here we have way more buying. We usually have significantly more buying in here than we do later in the day. Maybe market on close sometimes is greater, but look at this, just middle of the day, and then what happens? Stock starts breaking out. Everyone goes wild. This is it. It's going to push. This got me today. This was it was absolutely perfect because you cleared everything. You came down, you couldn't gap fill, you broke lower, they took you over, they made the higher high. There was nothing about this that you were going to look at. Now, someone will point something out to me later, but hindsight's a beautiful thing. If you look at this, there's no way that you're looking at that and thinking that I have an issue. I've got the break over volume, I've got the break over the VWAP, I've got the confirm move, and what do? Complete Matumbo. And I know that this level's here, I get it, but you don't know that you're not going to push up into that when you're buying this at 409.5 and maybe be able to get up a couple dollars before it hits. I understand where the open was, I get it, but you understand where I'm going with this. These are the kinds of games that you need to watch. This is the kind of stuff that makes people, they kind of start getting trapped and they start trapping themselves. One more, look at Tesla today. Look at the down, look at the rally, the retest, and then the breakout again of the higher high. Look at this. This is complete games, and that's all they're doing is they're triggering us on key levels to get us in. And that's why I say we're spending time on the ES so you understand what they're doing. This all happened, all three of those charts I just showed you, it all happened at the same time. Please comment on that, and please let me know if you're interested when I notice those nuances. Those nuances are from just me trading from a long period of time and knowing how to, I guess, read them. But if you are become aware of those, you know that, because the way that I trade is really simple, right? I'm top down. So everything goes like this. It goes index, then it goes sector, then it goes stock. Well, if the index is doing this and playing these kinds of games and you know it, then when your stock starts breaking out, you're going to be way more cognizant of, hey, is it one of these? Are they pulling the flim flam? And you want to be aware of that. Now you can see right here when you broke, that's a pretty easy read, right? When you look at hindsight and you're breaking, but you broke before and rallied, and then you broke before and it didn't work. So you think it's going to break this time, and then you make the lower low and they give you this bar. So it's game after game after game. And you are trying to respect certain levels, but you are having an issue with it. Now, if we take a moment to just go over the simplest of indicators, not get too complicated. Some of my indicators I change and I have proprietary settings. I didn't do that with this MACD. I just want to be really clear about that. Look at what's going on here. We're about ready to break the zero line. We're getting wider. There is nothing that screams about this from a long-term trend that this is not going to break, that we're just going to miraculously hold. And what's important about this is a couple things. We need to mark what happens off here. So when we're here and we start breaking, this is where we broke. And if we just kind of mark up from that level, it'll put it in perspective. So you look like you were going to break, and then you rallied for three weeks, and then what happened? I'm not saying that we're going to do this. What I'm saying is that you can bounce off these lines and then go from there, just as you broke above and then retested that line here, and then you went higher, right? We all can see that right in here. When you break here, we're expecting that break to continue the way down, right? But we don't know that that's going to happen. You could just kind of do something like this and then kind of start coming down. That could happen as well. So what I'm getting at here is we have to look at these, we have to identify them. And if you take nothing else from this graph, the MACD is breaking, period. And you can see it right there. That is a weekly chart, and that is something that we need to pay attention to. Now I'm focusing on the weeklies because that's what we tend to do, but I wanted to go to that 5-minute chart, as I said before, and show you those three so you can understand why this is so important. Sometimes people will comment and go, gee, you spend a lot of time on the S&P, and the reason for that is because I'm top down in the way I look at everything, right? I look at the index, then I look at the sector, and then the stock. So I hope that makes sense. Now, this is the Ichimoku cloud. I really don't care if you believe in it or not. It took 30 years for the guy to make, so maybe give it more than a weekend before you say it doesn't work. So you see where you're sitting right here? There's value in this. I guess you can tell that I believe that. See how you're sitting right in here? You're about ready to get into the cloud. So if you do nothing else, by the time that we get to this level, and we can actually mark off exactly when that would be, if we did nothing else, by November, we're in the cloud. Okay? We have not been in the cloud weekly or below the cloud weekly since we came out of it back here in May, and since we broke down through it here. So this is not something to take lightly. And if this starts to roll on a weekly basis, this is something we want to pay attention to. I want to know where we are on the cloud. I'm happy that it's green and it's not red because red's bad. And red actually, just remember, this is a leading indicator no matter what people think. So this mark appears 26 bars later. So if you come here and you go 26 bars later and you look here and you go, okay, well, March 22. Well, if you knew this March 22, do you think that was helpful because of what happened? So what this is telling you now, unless it starts changing, but this told you here that we flipped to green and you got 26 bars, and then you would say, is that helpful? Let's get rid of that. But you can see, would that have been helpful to know 26 bars ago that this flipped to green? I would say that would have been pretty helpful to know. So this is telling you right now where you are, 26 bars. Now, are we going to stay here or not? That remains to be seen. Once you get in here, it starts getting a little goofy. It starts getting a little iffy. And that's something that we'll talk about in another video. But understand that if we don't start getting our act together, we're going to start getting into this over the next coming weeks, in the next 4 or 5 weeks, and we don't want that. Now, this is rate of change, and it's exactly what it sounds like. It is rate of change. And why am I pointing this out? Pointing it out because we're negative and we're trying to get higher, and every rejection we're failing every single time, and all it's doing is following this. It is literally impossible for the market to rally if this is what we're going to get. If we're going to get this and the rate of change is going to be negative, then you are going to have negative returns. It's really that simple. There's not a period here where you're going to see that, where it doesn't have an inflection point that doesn't lead to some kind of pullback. You don't want this to stay prolonged like this. It's not enjoyable. And quite frankly, it's very, very rare that you are down here. You're going to see this in 22, but you're not going to see this a lot. You're going to see some of this in 19 and 18. But if you roll back a little bit, it's little blips where you see that we are this low or have a reading like this, and it doesn't go very well, right? You have the great financial crisis back here, and obviously you have these great times during the pandemic, but this is not where we want to be, where we have this. And I think this is a really important distinction for us to look at. Now, if we just wrap up with the most basic of indicators here, we can see that we have broken the 55. Remember, I use a 12, a 22, and a 55. You should use what you're comfortable with. So I've got a 12-22 weekly cross. I have not had one of those since the beginning of January, or quite frankly, December, where we crossed up. and now we are crossing down. I've seen things look good before. This is not what bullish looks like. Here we are on the 55-week. We are closing below the 55-week. We have closed below for the first time this year. See where we're at? We are closing below the 50. Got here and came right back. Here we are closing below it, and we are lower than we were here. This is not what you want to see. Now, one of the things we've been tracking here is smart money confidence. And we don't refer to it as smart money. We refer to this as institutional money because that's what it really tracks. Sometimes retail is actually performing better. So let's just refer to this as institutional money. And that's what we usually do here, and we find that to be a little more helpful. I just want to give an update here because we did this a couple weeks ago. Now, when you get to these bottom levels in here, let's leave this live for a second. And when you get to these bottomish kind of levels in here, you'll note that those bottomish kinds of levels tend to lead to, doesn't really matter where it is, but when you hit some kind of bottom and turn, you get a little bit of a turn there. And let me just leave these here for a second so you can see what I'm talking about. It'll be quite apparent if I leave them in for a moment. So it's not even really about where they are, right? Where you are in the chart. It's more about the turn and then what happens from the turn. That's what's important. Now, this is going to make sense in a moment with where we're going with this. So what we are focused on is the following. We're focused on where we are right now. And what we're looking for is some kind of turn. Now, we want the turn to be up here. And now let's take these off because I don't want to confuse everybody. And let's put these back on. Now, what we want to do is say, yes, we want the turn when we're over here because that's the more powerful turn. Just as here is going to be more intent on marking what? A top. Got it. Okay. So then we have these tops here. Well, when do these bottoms actually form when we have these tops? They form when? These tops are forming right here, but what's happening? They're curving. We're getting a curve down. So if we can get that curve down, that's really what we're looking for. In other words, you can see how we're shooting up in here, right? So you're starting up and then you're shooting up and then all of a sudden you're starting to come back down. When you start to see that turn is defining this bottom and then that's leading to this. That turn is what's getting us this. Now we started to have that turn and then, as I like to say, we got batumboed and they said, no, no, no. And now we're going higher. As much as I want the turn to happen over here, over the green line, I'll take it here if that's all they're going to give me. I'll take what you give me. I will play the hand that I am dealt. But that's not what we want. We want it over here, which means we still have a ways to go before we're putting a bottom in. If you take one thing from what I'm suggesting is any real bottom has a ways to go. Now we have some other details that we're going to review as well, but this is a big one for me on smart money because this is absolutely glaring. And it's not the fact that, oh, you're just over, so you're automatically going to go to new highs. No, but it puts in a bottom. Now, whether or not that bottom is short term or long term, that remains to be seen. Let's just take a moment and let's drill out to just the year and just look at the year for a second. So we're just looking at a 1 year on smart money confidence. And this is where we put in that bottom in March. Retail. Remember all the regional banks and how retail was calling for the end of the world of all the regional banks, we were going to collapse. And guess what didn't happen? They didn't collapse. Okay. But we're not even seeing this kind of level that we saw here with everything that we have going on. So we have to ask ourselves, why isn't smart money running into this area with the same trajectory than it was here? See how fast they had to get in? And here it's kind of like milquetoast. It's kind of like they're not really in a big hurry, are they? Well, what's the difference and why do we think that it is that way? Well, for me, the most glaring part about this is you're approaching the end of the year. And why are they going to put capital to work towards the end of the year? You can see right now, and we're going to go through a bunch of charts, they're locking in their year. So as long as they're locking in their year and we're dropping, we're not going to have these big rushes of institutional money into the end of the year. Why play with when you have it locked in? They were in the Magnificent Seven. They absolutely crushed it. They're going to lock that in and they're going to wait. Now let's take a look at something else for a second. Now here's dumb money, and we don't refer to this as dumb money. We refer to this as retail money. Now what we're going to do is just take a look at this and go, okay, well, when we're at the bottom and we're sitting at this bottom, that's when we bottom. All right. And then what happens? Then we start to go higher. Okay. We bottom and then we start to see a little bit of a higher. We bottom and then we start to see a little higher. So what you're noticing is that there's a little bit more of a correlation between what retail is doing than what smart money is doing. We're seeing the exact opposite, right? When we peak, the market peaks. When retail peaks, the market peaks. Okay, it's kind of the inverse, the other way around. But when we break down here and start rising, you can see how we broke down here and then we started to rise. The moment we start heading in that downward trajectory again, like here, what starts to happen? Well, we start getting that downward momentum. And that's not really what we want to see, is it? So if we understand what we're supposed to be seeing, and this is what we have, then this is what we have to work. It doesn't really matter what we want. We can only play the hand that we're dealt. And right now we're still going down. Now we have this huge trajectory on the way down, but look at what's happening here. And please comment below. I'm covering this because I was asked to. Your comments mean a lot, and I do appreciate you sharing these videos, especially now during how difficult this time is. Let's drill into this on the 1 year. Now you can see right here, and then look what happens. All right. And then we start to go a little higher. Everyone's feeling good about themselves. We're smart again. And then what happens? We start to come down. And then as soon as we start to come down, this follows. Always happens with these red line breaks, whether you're breaking to the red on the upside, and you can see how that played out, versus breaking to the red on the downside, and you can see how that played out. That's what's so important about this. When you break to the upside, that can be a bottom. If you go back and look about a month ago, we were talking about it and going, "How? This has the possibility of being some kind of bottom. I think we should pay attention to it." And we were reviewing that and talking about it. Clearly, that is not the case right now, and that's something that we have to pay attention to. But what I'm trying to get people to understand is that what was once happening is no longer happening. That we're actually going the other way. At the time of filming this, I'm doing it on Friday, and the amount of reversals today was staggering. We're going to address it and what's going on. But we want to watch this. We want to watch the trajectory of which way we're going. Down on retail is bad if you take nothing else from this. Up on retail is good. This is the macro trend right now since August. Where did we peak? August. I can actually leave this on for a second so you can see that. And then you can just kind of see how this just really just walked us down the whole way. The hope, and there I go again, hoping was that we were going to flip here. What's troubling to me is that we didn't even take out a new low yet and roll, and we've already taken out a low on the market. This would indicate to me that we're probably going lower. Whether or not we do, as always, it remains to be seen. But these dumb money, smart money, or institutional retail, we need to keep monitoring this. Please comment below if you follow how I'm putting this down. I think it's more helpful to break out dumb money, smart money separately instead of together as they do it. But you guys let me know if you'd rather see it together or separately. I think looking at it separately makes you understand how you could utilize it. We could also go over the spread differential. I think that's helpful as well. But comment below if that is, then that's something that we can just add to these videos. Now, one of the things I like to do to get an understanding of what's really going on out there and are we seeing shifts, I put all the sectors and the indexes into one graph. INDU down here, this is really just going to be metals. So this is actually down here, this one's actually metals. It's not the Dow. Now, why I do this is because it gives me a sense of where money's flowing and where money's flowing out of. I start it right here, and it starts on January 2023, and then we can look at how we're progressing. Now, there's a couple things that we're going to start with when we look at this graph. Number one, you can see which ones are declining, and you should start to see which ones are starting to rise, which ones aren't making new lows. And I think that that's where you can really get value from this. The other thing I put in is I put a zero line in. It's as close as they will actually let me get to a zero line. So what I like about this is pretty simple. You can tell where we're breaking, which ones we're not breaking. And when you start to see them start to break, especially towards the end of the year, we have 2 months left here roughly, you want to pay attention to that because that's usually where you're going to start seeing a lot of selling. That's where you'll start seeing the majority of your selling is towards these that are breaking towards the end of the year, which is really what's happening with the XLI names. And we know how the dollar does affect those names, so that's something to pay attention to. You also want to look at the S&P, where the S&P is sitting since the year, which names are above or below that. Now, what's crazy about the S&P is you have XLY that's above it, XLC and XLK, and the Qs. That's all that's above right now. And I think that's pretty distinctive of what we've been expecting for the year. So the question really is, are these sectors going to hold, or are they going to get to the point where they're underperforming? That's what we don't know. So what we do now, if they're looking at this, is we'll take another snapshot of this in a moment, and you can screenshot this. I'll actually have this specific one directly in the free newsletter today. So if you don't get that, there'll be a link in the description, and there will also be a link in the comments that I'll pin so that you can just make sure that you get those 20 slides that go out. But the purpose of me showing you this is, okay, so basic metals were a disaster. Nobody wanted utilities. Well, if we go over here, we can mitigate which ones we're looking at. And that's why I like this graph, because again, as everyone knows, that if you've been following for some time, I'm top down in how I view the world. And what does that really mean? It means I look at index, then I look at sector, then I look at the stock. And that's just the way that I view the world. It's the way that I trade. It doesn't mean that I don't look at different names. And we're going to get into this and how we're losing subsectors and industries in a moment here. But so here's the S&P, and this is how we're going to kind of look at the world. And one thing that we're all aware of, because we're living it right now, is that, let's turn that over here, and you're going to see how we're making lower lows. Now that's not adding a lot of value, but here's where the value of this graph comes. If we're making lower lows here, what we always want to look for is show me where we're not making lower lows. So here and here, we're making a lower low. And if we come to this, we can see that energy is not making a lower low. But what is energy doing? Energy is pointing down. So the probability that this could make a lower low still exists. Now people will argue about the war. Okay, maybe they're right. Maybe we're not going to make a lower low because of the war and energy and commodities. But I think there's another way to look at this. So if we go here and we look at XLP, we could also say, well, this might also hold because we haven't made that lower low. But we did make a low right here, and when we made that low, we just took it out. So that would also lead me to believe that something like that, maybe that's not the best way to look at it. So then we get down into utilities, and we can see this lower low from October, and we know why that lower, I'll make that red. We know why that's there. That knee trade that we had, that we absolutely, if you follow this channel for some time, we had a knee trade and the NEP trade, and absolutely crushed it on there. But look what happens. Then we rally up, and then we rally back down here, and then we make another attempt here, but we hold. Okay, so this is stronger than everything else. Now, for our intensive purposes, what I'm going to do is I'm just going to take those off just to clean up where I'm going with this. And so what we're going to note is this. We're going to note here, here, and here, and how that is reflective of the S&P. And we could say that even though this is some kind of bearish pendant in here, which we're not going to draw, it's there. And this is a really nice way of looking at all the sectors. But we're seeing money flow into utilities. So that might be one spot for you to look at right now that is safe. One thing I see a lot on social media, and it drives me crazy, is just wait for this to happen, then you get back in the market. Something's always going up, something's always going down, and there's always opportunity to make money. And you as a trader have to decide who you are. It's not up for me to tell you who you are. It's not up for someone else to tell you who you are as a trader. If you want to be the kind of trader that sits out when the market gets tough or when the market drops, that's on you. That's not who I am as a trader. I am constantly looking for opportunities. I'm constantly looking for ways to make money. Professional traders trade. They look for opportunity and they take advantage of the opportunity that they see. Doesn't mean that you want to trade like that. Doesn't mean that you need to be like that. Just understand that that's the way that they think. They don't think, oh, we're below the 200, so I better sit out. They would get fired. They would lose their jobs. Just be aware of that. It doesn't work that way. They have to perform. That's the job. So just deal with that. And I hope that makes sense. But I see a lot of people saying, oh, just wait for this to come back and this moving average to cross. Meanwhile, look what's happening in precious metals. Now, that shouldn't be that big of a shock. This INDU, again, this is not the Dow. And I want to be real clear about that. This is actually on the London exchange that I'm using right here. And there's another one that we use as well, but this one's a little cleaner. So what do we know here in looking at this graph? Well, we would know that we could take out XLP, even though it hasn't hit a low, because it took out a lower low. So we know that. So we can say that we have three right now by looking at the year that are now telling me, okay, well, this is something that we need to pay attention to. XLE's holding in there, but utilities seem to be the best. We have some utilities in the community right now we're doing fairly well with, okay with, but you're also seeing the metals turn and energy hang in there. Now, this does fit in with what's happening also with the tanking stocks, because you're starting to see not only metals and precious metals, but commodities become more demand. And also, obviously, you have some scarcity with what's going on in the Middle East. So if you take one thing away from this, physicality of real assets is really should be a focal point right now. Certainly a focal point of mine. And then preservation of capital through what we're seeing happen here with utilities. And there's a reason for that, why you're seeing preservation of capital, but also why utilities are doing what they're doing. And to me, it has a relationship really to do with what we're seeing with the disconnect of the dollar and the disconnect of the dollar with the treasury market. We're going to get into that as well, but there's some other really fascinating, I think it's fascinating, things that are going on here that we're going to address. Now, what this feature will do for us, we're about to hit January. You'll see all the indexes and you'll see the way that they move. And what we can do is we can just take snapshots. We can just very simply hit this button and then see at some period in time from this June to this August and see what's performing, what's underperforming, and it just gives us a real quick snapshot. And what you're looking for is you're looking for changes. So if we stop for a minute, you can see in July how we're getting the breakout of the NASDAQ, the Q, the XLK, XLI's leading, SPY's leading, XRLRE still pushing up. Everything is still pushing up. And then what we do is just let it play out a little bit longer. It takes us into September. And you just take a break and you look and say, okay, are we seeing any changes? And we are. We're going to do this in a different way in a second too. But you're actually getting a ton of data by looking at this. Because when you stop between this, like what I'm using quarter versus quarter, what are you really getting here? Well, you're getting data that's telling you something pretty glaring. Number one, look at how XLY overtook XLI. So that's telling you that they were buying the consumer discretionary names most recently. And you can see that lift there. In other words, discretionary names in June, from June on to September, were breaking out. They were actually outperforming the S&P. Now we know that the Qs were up here and XLC was starting to lead. We know the Magnificent Seven, as they're referred to, what's going on. But look at how XLY was breaking out. Look at how they're dropping industrials. At the same time, you're getting that stronger dollar. And that's a pretty interesting distinction, because you would think that with the XLI that this, yes, would come down more, but the fact that all of a sudden discretionary stocks, meaning the retail names, are moving up, that's kind of interesting at the same time. And again, we're going to get into that with the dollar and the divergence, but let's let this play out to now and see where we're at. So that takes us to here. Now, if you're watching that, look at how far XLI is dropping. So by understanding that and just doing that run of it, you get a real clear distinction on how something is dropping out of favor. So by looking at this, you would look at XLI and say, oh, we're at the zero line. But when you understand how far it's come and how short a period of time, can you get that by just starting in January and running? Sure. But when you start really getting into it and letting it run the way that we did, yeah, you can see it pretty clearly. So I like to do that usually every quarter and just say, okay, well, what's really out of place? Now, the easier way to do that is to just take a snapshot. And you can see that snapshot right in here. XLY, see how it's breaking out. And all we're doing is really just looking at the first quarter. We can see that things are pretty much aligned with where we thought they would be. S&P pushing up, XLY pushing up, XLK, XLC leading, NASDAQ leading. Now here as well, what are we seeing? XLF, XLB, LRE, these are all at the bottom, and we're seeing how these are underperforming. And really what we're looking is from March to roughly June 30th. You're really looking at that second quarter. XLK is leading, Qs, XLC, XLY, look how it's up. Look at where the SPY is. And then you're getting a sense of, okay, these are starting to come up a little bit, the defensive names during that second quarter. But you're watching financials, they're still down. Basic materials are still down, and we're basically flat. Now, this is just telling you that snapshot of that time for those 3 months. Now, this is where it gets really interesting. And what I'm going to have to do here is take this line down to that zero line for a moment so you can see this. Okay, that's close enough. All right, so now what you have is you have us right around that June level right over here. Clean that off. But you got that June level, we're right around here, June 30th. And this is just going to take you to date. Instead of just doing the quarter, I just want to do this particular snapshot because this is what we have and this is what's going on. So what do we see happening from this quarter on? And people are wondering why they're struggling a little bit. Well, nothing's really up. I mean, if you really get into this last quarter, I mean, what's really going on? Everything's coming in, and everything's coming in hard. And look at XLRE during this period of time. They're absolutely crushing it. What are you flat on? You're flat over this quarter on what? Precious metals. XLC is actually holding in here because they have decent balance sheets. That's your Google, your Meta. Despite these moves that they've had, they're still flat on the quarter roughly. Well, the quarter actually passed, so you were actually up on it, but you get what I'm putting down, hopefully. And look at where energy is. Now, energy is the top performing sector. But is it? Because look at where energy was. So yes, it is the top performing sector, but look at how it's screaming down. So do we want to be buying the names that are screaming down right now? Is that really what we want to focus on? And people would say, well, yeah, we want to buy the energy because of what's going on overseas. And my argument would be, do we? And that, no, it's a weak argument. Or do we want to buy the tankers? Well, in the community, we bought the tankers, and there was a reason for that. It was preservation. Their job got harder. Costs are going to go up, but so is pricing, and people are going to want that. They're going to need tankers. But what would be really interesting is to say, okay, well, we had the conflict when this conflict kicked in. Let's take a snapshot on how the world's changed since this conflict began in the Middle East. And I think starting October 1st, even though it started a little bit after, would give us a real clear snapshot on going, okay, how is money flowing since this conflict started? Now, I appreciate everybody sharing these videos. Even if you have a couple followers only on Twitter or YouTube or email, you sharing it, first, it means a lot to me. Second, for people to get this and understand what it truly takes to be successful doing this, I greatly appreciate it. And what I try to do here, if you guys haven't picked up what I'm putting down, is I'm trying to inform and educate on how you should view the world. I'm not trying to come out and say, oh, we're definitely going to crash, we're definitely going to go higher. This is what's going on, and you need to learn how to critically think, as well as I need to learn how to critically think and make my own decisions with the data that's presented. Obviously, I always give ideas on how I see the world, and I always talk about what I'm doing and what we're doing in the community. But the purpose of these videos is to get you how you should view the world, right? 96% of traders and investors that are out there, they don't beat the index. So if you're watching these videos, you're one of the people that want to be in that 4% group. So understand what it's actually going to take to get you there. And it's not following some dude on Twitter that's telling you what he's doing or what he did 24 hours after he did it and how smart he is, right? It's going to take you to actually critically think about where money is flowing and then how you are going to identify those opportunities. I hope that makes sense. Anyway, isn't that surprising? INDU. So here we are, and here it is. And here we are in October. And look at what's outperforming. Now, outperforming is an understatement considering that what is not dropping. All right, so here we are. How about XLU? Okay, so we're seeing funds flow into these sectors. That is very clear that they are leading sectors, meaning that if you were to short the NASDAQ and go long materials, you would be up, right? That difference, meaning if you went long XLU and shorted the Qs, you'd be up 3.6% on the month, right? They're called pair trades. I can do a whole video on them, but there's something to this because what it's telling you is, yeah, we're probably seeing people lock in their year. Now, all we kept hearing is we need to buy energy because the energy names are going to lift. Why are the energy names going to lift? Because we have a conflict. Energy is down 6%. Okay, energy is down 6% on the month. Does that seem like a sector you need to be rushing into right now? Probably not. Look at XLY. The XLY names have gone over for a period of time. And the reason I did that is because I thought that they were the most at risk to what may be coming or may not be coming as far as do we see hard times, recession, blah, 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 all that. But they seem the most overvalued. And it seemed like that's where people are going to take the most money out. XLY names are toast. So the idea that you're going to go out there and try to bottom fish XLY names right now, maybe you do, maybe you don't. I bought one of the top performing XLY names this week. I was up $1 and now I'm down in it. And I mean, it was not even a question of how fast it was. And it's knocking the cover off the ball and earnings are great. And we'll get into that in a moment. But what I want you to take away from this is what are we seeing happen? We're seeing money flow. How can you say money's flowing here if we're zeroing out? Because look at the indexes and where the indexes are and how they are collapsing. And I think that this graph tells a lot. The first thing it would tell me is I'm not out there buying XLE. I'm out there buying crude and I'm buying the tankers. That's what I'm buying. I'm not buying just random XLE names. Okay, that's the first thing. XLY, this is telling you that XLY is toast. If you're into the fourth quarter, which we are right now, and your sector's down here, you're at risk for tax selling, period. XLF, at risk for tax selling. And it just goes down the line. Okay, once you start to break here, but you really look at year to date for that. But if you start to see XLY the way that this is acting, this is something you want to pay attention to. So I hope you found this helpful. I think it's really important now that I've overlaid this, that you can understand what also you need to pay attention to that could actually move the market. Now, in the next video, we'll get into this in greater detail, but I just want to point out the basics here, and I'm going to leave this in just in form. In other words, just in line form, just to point out what I'm getting at here. Sometimes it's just cleaner and easier to do and gets rid of all the nuances. So we can see that since October 3rd, we have not made a new high on the dollar. We can see that this is where we decoupled on the 10-year, and we can see how yields are still rising. And at the same time, yields are still rising, that we are seeing what? The S&P is dropping. So what we're seeing is we're seeing a disconnect. Now, where's the disconnect coming from? The disconnect is coming from that the 10-year is putting more pressure, the index, than the dollar is. The dollar was the pressure. You'll all remember this. The 10-year is now the pressure. So in other words, when we had the dollar and the dollar was the issue before, that's what we were watching. Everything now is based upon the 10-year, and all of course, we also have the macro events that we have to go over. We need to focus on the 10-year. If the 10-year, and again, I'm doing line form for a reason, if the 10-year starts to do something like this where we peak, undercut, and start dropping, maybe we could see a bounce there. I'm going to get into this in more detail in next Monday's video when we go over this. And as everyone that has been with me for about the year and a half or 2 years, we've been doing these videos. I like to do it this way where we follow through the week. I find it extremely helpful, but this topic's going to take some time. And I really want to focus on some things that people need to be aware of before we open. Now, I'm going to explain them in chart form by showing you what's happened with some of these moves. And this is troubling to me. For example, we had a great quarter, absolute great quarter. And there's no one that's going to look at Microsoft's quarter and have a problem with it. They're just not. Now, what happened here was the gap fill, and we can see the gap fill. The troubling thing about this, and people that are going to look at the moving averages, which of course I do as well, and say, well, we held in here. And we did. We held the 22.55, but we broke the 12. And we did hold in here. But there's more to this. This kind of action, when you're supposed to bounce and you have those moving averages right there, you need to hold this. In other words, the fact that this entire bar is one big wick, which means what? That means all these prices up here were rejection. Remember, wicks are what? Price rejection. This was all rejection. Look at where we are on this bar. I don't even need to put my 50% line on it. We're below everything. We must consider this. This must be a consideration, what happened on Friday. And there's more that happened on Friday, and I want to address this. So while there are some signs that I'm going to show again on Monday that okay, maybe we could say that there might be an end to this. I don't think there's an end to this before we see some kind of flush, is where my head is right now. Now, if I look at how this is going and we're paying attention to this move, we can see this very, very clearly. And we can see how this is happening. When we see this kind of stuff, we want to pay attention to it. This presents excellent opportunity to get into short positions if you know what you're doing. Take a look at Meta and look at how Meta acted right in here. Tried to lift, couldn't. Let me show you this. Look at these earnings. Look at how we acted. Now, when you know that this is how you're setting up, it becomes very easy for you to put on trades. Let me show you one. I'm going to short Meta, the high, I'll close. Oh, that was quick. All they did was take us up to bid us down. That's all they've done so far. Meta, I'm still short. I see no reason to do anything with it. So I'll leave it on. I'm going to just try to stay short them. I'm not going to try to keep entering them over and over again. That's what I'm talking about. Like, I don't want to keep entering this 5 on my Meta short now. Done nothing with it. Up 2 now on the NVIDIA. Done nothing with it except that. Once you learn the game, guys, it gets a lot easier. Up 3 now on NVIDIA. We took out the pre-market lows, didn't we? What's that low? 284. Is that where you're going to bounce? Is that what you're doing? Is that guy still there? That guy's still there. Let's see. See if they can take him out. They take him out, the floodgates will open. Up 6 on the video now. If that breaks there, the floodgates are open. If it doesn't, you're going to bounce. That means he's still there. It's the high of that bar right there. 43. Watch the 43. Out, close to half, even half on. If you break 84 here, guys, the floodgates are going to open. I might actually put some back on with an 86 stop. I may add to this. So let's see here. Added. Let's see what they do. They're just going to take me down. Nope, the guy's still there, isn't he? Let's get back to this meta trade I have on because I don't like that. You should have broke. So you should have broke the 84. You shouldn't make it that hard for me here. All they're doing is eating up demand. I'm not going to spike off of that. That's all they're doing there. They should have broke. I know the RSI is going to be not in my favor here, but you should have broke there. Instead, you're doing the opposite. You're holding, broke there. my early again. For 4,200 right here. Let's watch what's happening. Might need these things to rally a little bit more. I really am having a hard time believing that you're not going to crack, that there's going to be enough supply there. There's enough demand at 84. It just doesn't make any sense. Where were you last night? Yeah, but you're breaking, but you're not breaking. Like you're not following through it. Guy's still there. I'm going to close that half that I added. I'm going to put it back on in 2 seconds here. So I put it back on. This is why I trade liquid names, times like this. So once this bar forms, in a minute, I'm literally going to use that bar. And if I flip that bar, I'm going to close that addition. I closed half. I think that's the bar. It's going to get me where I need to be. See how they did this? And then this encompassed us right here, encompassed those 3 bars. I think we're good. I think they're going to do it. What's going on here at this minute? Oh, that's why. Okay. Come on. How are you going to hold here? Go to your home. They just ate up supply. I don't know what you're doing. All your supply is gone. What are you doing? You should be cracking. What am I up another $1 in that? All right, there we go. Thank you. All right. So I pulled a little bit out of the secondary ad, $1.50, and we'll go from there. Yay. Who's a winner? We are. Make sure you type that out there, John or Afar. Who's a winner? Boom. Close to half the ad. The rest I'm leaving on now. Now I'll probably just use high the days, stop and stay short, I think. I think that's what I'm going to do here. Instead of adding over and over again. I mean, nailed it. Where are you going to find any support? Who's going to buy you? 277.38. You do not want to be shorting here. Okay. 100% out of meta. I'm 100% out of meta. See the little island right here? And now we're holding. See how we're touching and trying to close over here? I'm up enough. I mean, we killed it on this. Absolutely killed this trade. So I don't know that you're done. I think you might get the 277. I don't really want to play with it, but I'm 100% out of it for now. If I can find another spot in later, I'll get it in. But just the fact that I'm even touching the 9 here and you're starting to go sideways here. I'll show you this. I have it on another screen, but here, I mean, see, look, I'm at a 6. Okay. Now I'm not at a 6. Now I'm at a 9. There's a bounce out there. I don't want to be waiting for the bounce to close the rest of it. I slaughtered it on this trade. You can go back and take a look at where we entered it, how we played this whole thing. We just played it perfectly. I think it was 92, something like that was the entry. I have to go take a look, but I mean, there was at least 10 points there plus the ad. I don't need there you go. So you get some kind of bounce out of it. You're at 290s. You know, this is where everyone's going to start thinking we're going to push. You know, it might take a little bit before that happens. But I don't know that I just be jumping into anything here. I don't think you have a real edge here now. I think maybe we watch the 11:30 auctions and go from there and see how they play out. But, you know, wait till you see something that actually tells you that that's where we're heading and how this is going to go. So I hope that's helpful. All right, guys, should have had a great one. Now I get asked a lot to show trades, and that's why I showed that live trade. If you find that helpful, let me know. I can obviously show other trades as well. I think I am better off showing it that way versus showing the actual dollar amounts and say, oh, look at me. I just don't see the value in that. I think there's more value in actually seeing the thought process on what that trade looks like when it's played out. I just think that there's more value in me showing it that way. So I'm always open to hear what you guys think of that, and then how you want to play those names or learn more about that. I mean, that's why I do these videos if you haven't figured that out. And you can see down here how we acted. We actually rallied back up, and we actually put some of that back on later in the day and did okay with it. But it's always the first time that you make the most amount of money, because that's when you have the most confusion. So, but keep that in mind. Comment on that and how that could be better. Do you think dollar amounts matter? Should I show that? I don't think that I should. My personal opinion is to not do that, but I appreciate your comments because it helps me know how to make it resonate more with you. And some people say, oh, show dollar amounts because that does do it, but it just seems like that's just more ego feeding. I think actually seeing the thought process, instead of people saying, look how easy this is. I've been trading over 20 years, and you can see how my thought process was on that trade and how I was worried about very specific levels. So just comment on it. It does help me greatly. And I want to talk about some things here that you need to be aware of that I think are just becoming very glaring. So first off, we're losing more than we're winning. What do I mean by that? Netflix, this crushed any metric. CFO completely set everybody up, said, oh, watch your expectations, watch your expectations. Where did we get to and where did we reject? And this is the point that you need to understand, no matter how I say, oh, maybe there's this glimmer over here or we have to look at that. You have to look at what's actually happening in the market. We're cracking, and that's not debatable. Here's the 55. We are below it. We had a great quarter. We can't even stay up on a name like this. FCNCA. Look at this name. Record revenue record earnings. Here's the 55. What happened when you got there? Look at these numbers. You're earning 50 a share. For those that don't remember, when they bought that company, they were doing 16 to 20 a share. And then they bought this corporation, 20 a share. This was during the regional banks, 50 a share, 50 a share. And we're dropping. Like, you have to kind of keep this in mind and what's actually happening. Record earnings, and we're dropping, and we can't hold the 55. And that's if you're doing good. Like, let's be clear about what's going on out there. And this is, take nothing else from this video, and if this is the only thing you're taking from it, you're killing me. But if you got to get this concept. Good news, and institutions, 55 is what? Where institutions act, support or deny, matumboed, right? So here we are in Netflix, boom, they're killing us. FCNCA, it doesn't matter. This is what they're doing with record earnings and record revenues. Now, what are they doing to the companies that aren't doing well? Well, here's Ford. This is what they're doing to Ford. They're destroying these companies that are missing or any kind of weakness. And we're losing more industries. And I really want you to take that home today. We're losing more industries. We're losing the subsectors. Now we're losing the insurance sectors. Okay? We're starting to lose more and more industries. That's not ideal. And that's something that we really need to take into account.